Okay, I think we're officially live. I just talked for like 13 minutes and recognized that I wasn't actually sharing my screen. So now the good news is I'm actually sharing my screen. So you guys will actually be able to see what I'm talking about. Uh, Let me share this link to my group real quick, and then we will get this party started. It's the worst when you forget to share your screen, because then everyone's like, what are you, I can't see anything. So if you can hear me, just drop an I can hear you down below. If you're excited for what I'm going to talk about, just drop an excited down below. And then we'll get this party started in just a second. Okay, so I should check the comments more often because everybody lets me know what's actually going on. Anyway, let's come back to here. So what I wanted to talk about today was where Bitcoin's headed, what the altcoin market looks like, and whether or not Bitcoin is breaking to the upside or it's going to break to the downside. And then I kind of want to talk about my DeFi Pillow Strategy. It's a strategy that I use to be able to create and generate wealth even in bear markets, and a strategy that I use so I don't depend on the price action of coins. I want to get out of the volatility of coins in bear markets or markets that aren't moving to the upside or highly volatile markets. And I want to get into a strategy to where I can have stable assets that don't really move much that I can earn yield on. So that way I'm creating a bank of stable coins that I can use for when the market actually picks up and grows. So without further ado, let's look at Bitcoin first and see where it's at, because if Bitcoin doesn't move, nothing else does. So just to start, let's turn off all these charts and stuff and just kind of look at where we're at. So basically where we're at right now, from what I'm looking at, is we are in a position to where we had a decent run. We've actually, let's look at the weekly. That's my favorite one right now. So when we look at the weekly where we're at right now, we've actually had something interesting happen this week that I think was actually fairly bullish for where we're at and what we're doing. As you can see in the previous weeks, basically weeks 1, 2, 3, basically the last 3 weeks, we've been sandwiched between 38.3 and 37.7. So that's a really tight range. We haven't really moved too far out of. We obviously wicked down here, but then we essentially stayed in the same spot the next couple of weeks. We did each week, we pumped, dumped, and then we pumped, dumped, pumped, dumped. And so it's just been stuck right there. The cool thing that I saw this week that happened though was we did the same thing. We pumped through and we actually held. So instead of this thing getting pushed all the way back down, this thing closed up here, which was an incredibly bullish sign. Because as you can see on this chart, what we've been doing for a while is following this trend line. So this was the little peak back here at the 64 sort of zone. You see there was 2 of them. That was the previous peak. And then this was this first one, or the second one, around that 68 zone. But this created this little line here, this little resistance line. And so what happened was we came through, we fell, got pushed down with the resistance. Once we cleared that resistance, we pumped and created a new all-time high. Then we fell off that. This is the 200-day moving average. So we essentially tried to touch and wick off of the 200-day moving average, which is the ultimate bullish sign. So if we clear that and we can wick and bounce, we're probably going to go to an all-time high. But we fell all the way through it. And then we drove all the way back up, and then we tested it 1, 2, 3, 4 weeks in a row, and then fell straight through it. Tested this trend line 1, 2, 3 weeks in a row, fell straight through it, found a bottom somewhere down here around 33 zone. And then we pumped, pushed through it, got pushed back down, pushed through it, pushed back down, but it stayed above that line the last 3 weeks, which is good. And the next bullish sign is we actually closed the weekly candle up here as opposed to down here. So we cleared a lot of ground. And when we look at the monthly, that's fairly bullish as well, because what happened was we were able to essentially have a low here in January of 33-ish. And then in February, our low was 34-ish. And then March, should we not have a colossal dump, we have a bottom of like 37-ish, which coincidentally is on that trend line that's been going down. So we fell through, and then we actually pushed up, we closed above it. And now in this month, we fell through, we wicked off of it, and we created this higher low. So low, higher low, higher low, and that creates sort of a bullish divergence. So it means we're trending this way versus trending down with lower lows, which is a pretty good sign. The only thing we need to focus on now is getting some higher highs and getting to a point to where we can clear and move past this bull market support zone. So what that looks like is, and as you can see, we've been trying to test it. And as soon as we do clear that, we typically go on a big run. So when you see back here, back in even January or June 2019, we fell through it. We tested it for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like 10 months, 11. Finally, we cleared it. And once we cleared it, we tested it, we wicked. And then finally it sent it kind of off to the moon. And then as soon as we hit that top and that trend line I created, we dumped all the way through. As soon as we fell through this, we fell straight through all the way back down, and then tested. And as soon as it tried again, it came up, it cleared that second line, that second all-time high. When we cleared it here, and then as soon as we tested it again, we fell straight through, and now we're in that same zone. So what we've been doing the last few months is testing, fail, testing, fail, testing, fail. And so what we're doing right now is the same thing. So what we're seeing right now is we're getting dangerously close to being able to test this again, and we're going to see if this is going to push through it and create bullish momentum, or is this going to fail again and push it straight back down to test this trend line, maybe even in this like 34 zone, because if it comes back down and it does test this trend line, then it's going to put in a lower low, which would not be an ideal scenario. But where it's looking right now, what's happening is we're testing this zone, which now is about 43.5 up to about 45-ish. That's the first big choppy zone we have to get through. If we clear that, we're likely to go through it and then come down and test it, which will put us in a place to test this 200-day moving average, which is around 48,000. If we clear that, there's a good chance that we're going to go on a run. And when I look at that, if we clear that and we open up the logarithmic rainbow, what happens, and this is the zone we've been stuck in. So it's this 33.6 up to about this 47 zone right now on the monthly. So we've got this like 34, and this moves up as the momentum and as we stay stuck in this zone. But we've been on this 34.8 up to about right now this like 47.6 zone, and this is getting pretty close to that 200-day. So big point to move past is this bull market support band will give us the support to balance and test this 47.6 up to about this 48.3 zone. If we clear those, it's likely that we're going to go on a run. So that's kind of what to look out for. It's a little bit clearer on the daily when we look at it, because you can see how it looks and what it's been testing and where everything's sort of at. So you can just see it more deeply. It touches this logarithmic line here. It touches, fails, comes back down, tests the trend line, comes up, touches the bull market support band, comes down, tests the trend line. Didn't even have enough strength here to test it. So now it's coming back on a run. Didn't even touch the support band. It's coming back. And right now is sort of deciding whether or not it wants to come up and test it again to either push through or get punched back down to the support band. And one of the indicators that I kind of start looking at for confluence on this is the 4-hour chart. So what I'll look at here is, are we able to clear on this MACD line? So this is sort of a divergence I look at. If this starts curling over and moving up, that means that and the blue gets on top of this orange line, that's bullish. And that means we're probably going to have momentum to the upside. So as you can see in most of these big runs, this thing will peel over and it'll come above the orange line, and then it'll clear all the way through, and then it'll fall through eventually, of course, and create the bear zones. Had to sneeze. But that's kind of the first point of confluence that I look at. So once this crosses and clears, it's going to give us some strength to actually pump up. And as you can see, it's been pretty choppy. When we look in here, like right here, we came up, we tested, got pushed down, we came up, we went through, and then we actually flooded past it. And I actually think this was a catalyst of an Elon Musk tweet. It actually pushed the market back up when he said he still held Bitcoin. but it pushed up and then it came here and it essentially tested on this line and then it pushed back through. And now we've kind of fallen through, which is this little zone here where we're in the red. And now we're just waiting to see, are we going to continue to see further downside, or is this thing going to peel over and we're finally going to start seeing some upside? We are on Monday. Typically Mondays, they either pump or they dump. In actuality, there's not really a good line, but you'll see throughout the week as institutions get more involved, the line will start to trend up or they'll start dumping as the week ends, because a lot of them I've noticed recently don't want to hold risk assets into the weekend. The other good thing that happened was when the Fed announced their rate hikes, it wasn't as hawkish as people were expecting, and the market probably already had it priced in, so it didn't hit us as hard. So basically, in a nutshell, we are in a position to test this bull market support band again. So as you can see in these previous weeks, we've come up, tested it, got pushed all the way back down, come up, almost tested it, pushed down, come up. We actually closed above here, which was bullish. And then now we're coming up to, we'll probably likely test it again. And then that'll dictate whether or not we move up. So we'll come up, if it looks like this and it just gets pushed straight down, then it's probably not the best scenario. But if it actually pushes through and it starts getting choppy in here, that could give us the strength to move through it. So it's kind of what Bitcoin looks like. Let me see if there's any questions before I move to the Ethereum and what the alts look like now that I'm actually sharing my screen. All right, so it looks like no questions so far. Now let's go back in and look at Ethereum and the alts. So Ethereum and the alts, they can't really do anything unless Bitcoin behaves. That's basically the fact of the matter. A lot of people call for like an alt season and all this, but it's not going to happen if Bitcoin doesn't behave. So if Bitcoin doesn't do anything, it's going to get rejected and fall through. So same thing with the alts here, though. The last big run up we had with the alts was in essentially April 2021 was when we had the start. You could say the bottom was March 28th, 2021, which legitimately almost a year later, we're kind of moving sideways. But that's when alts went on this really big run and people got just rich in DeFi summer. And this wasn't DeFi summer, but people they killed it in this zone. But when you look at it, it's still not close to what it looked like over here. Let's look at this on the monthly or the weekly even. Still doesn't even come close to what we could call the 2017 bull run. So it just went absolutely nuts up here. This was 2016. You can't even see anything beyond this, but this was nuts. And then it went down and it came back up and had that second peak and then fell straight through and went into the bear market. But that's what we're looking at now. The last big run we had for alts was in essentially March 29th, 2021. So what we're looking at right now for alts and Ethereum to be able to make a run is they need to be able to clear this support band and move through. So as you can see, once it fell through here, it wicked on the bottom, and then it pushed all the way through. It came above, and then we had December, and it just fell apart in January. So then it fell through the line, wicked off the support line, fell straight through, and then it tried to touch 1, 2, 3, 4, 5 weeks. It essentially tried to test here, and then fell straight through, touched the bottom again, which is probably a good sign. And so now we're at a point to where alts are essentially, they're pushing hard. They're trying to, it looks like the market wants to move into it and test this zone. And so if Bitcoin behaves, if Bitcoin can not have a colossal dump and fall apart, what I think we'll probably see is alts will clear this, they'll come test, and then they'll test this and they'll just go nuts. And hopefully that puts us in a place, and this thing should peel over if that happens. If not, obviously we'll dump. But if they do and Bitcoin's behaving and things are actually functioning and we don't have a colossal dump, then I would like to see alts go on an actual run where they come up to maybe like this zone. But for now, I'm just not sure that it's going to happen if Bitcoin doesn't behave. But this is basically where we're at. We are on the verge of what could be a pretty significant alt season if we can clear this zone, and if Bitcoin behaves and clears this zone and then clears this 48 to like 50K-ish zone, If it can clear this, alts will go nuts. And then if it clears this, they'll still go. And then if it can continue moving, which if it clears both of these, it likely will, up to this zone, alts will obviously follow with it. And then we should have a pretty good alt season happening. So we could have some pretty neat things happening, but we could also have some pretty big dumps happen if Bitcoin doesn't behave. It's all just resting on Bitcoin being able to behave. If it does, and if it can, great. If not, it's just going to be a troubled market for a longer period of time. So that's kind of where we're at in those two zones. Let me know if there's any questions from anybody watching. Just drop them down below and I'll answer them while I'm on. See if there's anything. Nothing yet. So now what I kind of want to do is just a little market update. What I think the market looks like, where we're at. I just, nothing's going to go on a run if Bitcoin doesn't behave. But when we look at the market right now, it actually hasn't been a horrible 7 days. So Bitcoin in 7 days is up 3%, which isn't bad. It's better than it's been. We're at this 41,000 zone, which is pretty good if we can hold right here. Bitcoin or Ethereum is up 11%, which is great for Ethereum. Don't worry about Tether, it's a stable coin. BNB up 6, it's fine. XRP's had a bunch of good news in terms of like their SEC lawsuit. So that's good news for them. Luna is trying to clear their all-time high. Luna's been just ridiculous lately, and they've been working on clearing that all-time high. Like even if we look at the Luna chart, it doesn't even look like Luna knows what a bear market is. And so Luna fell through, obviously, and then pushed and then just pumped. And it got stuck at that previous all-time high. Now, this could technically be a double top, but it was strong enough to push through. So if it touches again and Bitcoin doesn't behave, it's probably going to push back down here. Bitcoin behaves and Luna goes up to, I don't know, I think my next target's like 115 as a good zone, and then obviously farther from there. But it's just been ridiculous how that coin looks. Avax looks great as well. It's actually pretty neat to see it actually get stuck here and move through. So it got stuck, pushed all the way down, pushed through, pushed all the way down, pushed through, pushed. And this is just Bitcoin not behaving. So Avax has all this strength behind it and it keeps pushing through, and Bitcoin keeps dumping down and wrecking the market with it. So that's the big problem right now. Atom too, all of these coins are just on the verge of wanting to go crazy. Not so much DOT, it's almost there. Fantom even had a colossal dump because of FUD and all that stuff, but it's still, these alts want to move into a good place. And it's like, Mana, it's just riding that line. They're all riding the line, waiting for something to happen. And so nothing can really happen until Big Daddy behaves. And so that's kind of where we're at in that market. But so alts are looking good. I mean, Cardano had decent news this week. Avalanche, as usual, is just up like a monster. Let's see what else is going on. CRO. I mean, the altcoin market looks good. Litecoin even looks good. Chainlink, which hasn't moved very well at all, is actually moving. Uni, everything. So when things start moving like this, it means the market's heating up. And it could mean people are getting rid of Bitcoin to sell alts to take profits so the market will dump next. Or it could mean that the market's heating up and people are collecting for it to take off. So smart money typically dictates the market, and institutions dictate where it's going to head based on leverage. Elron. So, I mean, there's not really a lot of, doesn't look bad. It looks like it wants to go crazy. It wants to behave. ApeCoin, it's ridiculous right now. So, I mean, in my opinion, the market, these things want to heat up, and my accumulation point will probably be, I'll probably start deploying stables around like 46. And this isn't financial advice, make your own decisions, but I'll probably start deploying stables around 46 and then putting full stables in around like once we clear 50 and I'm comfortable with that zone, because 50 tells me like we are green for liftoff. So that's kind of what my targets are right now. Until then, I just sit on the sidelines. I have my portfolio I hold on to, but I'm not super interested in investing in the market with how volatile it is at this point. So that's pretty much what I have to say about the market. Let me know if there's any questions. Just drop them in the comments. I'll check real quick. Let's see, nothing yet. So let's keep going. So what I want to kind of talk about next is, someone asked me DeFi strategy. So I call this like my DeFi pillow strategy. And what this is it's a strategy to be able to create, essentially to mitigate risk in the DeFi, this decentralized finance market, and to be able to create wealth using a strategy that keeps me safe and risk averse when we're in a market like this, where it really doesn't know where it wants to go, where we could go down and put in a new low, or where we could pop up and create a new high. So basically it works in 3 different zones. I have strong stables, intermediate stables, and risk assets. So strong stables, and what I'm looking at would be, let's go into my watch list. If I can find it. Sometimes this CoinMarketCap's hard to find anything. There we go. So if we go into my watch list, and this is actually public if you ever want to follow it, when I go into Stablecoins, when I think about like strong stables, so when I say strong stables, and stable coins are coins that stay $1. Their ideal solution and situation is to stay at $1. So by being in strong stables, I create the ability to be risk averse. So I'm not in anything that's going to go up and down and go crazy. I'm in something that is basically predictable. And so when I look at strong stables, for me, it's Tether is a strong stable, US dollar coin's a strong stable, Binance US dollar is a strong stable, Terra UST is a strong stable, DAI is a fairly strong stable. So these are kind of the big ones that I would look at that I would consider strong stables, like healthy stables that I know I could depend on even if the market like does a colossal plummet. So then when I look at intermediate stables or kind of middle level stables that are fairly new and might not be as good, or not as good, but they're just newer. So they haven't been battle tested as much. I start looking at like true US dollar. Then I'd look at probably true US dollar. I'd look at Frax, MIM. I'd look at Mematic and Day. Those are all fairly new stables. Or maybe not fairly new, but they're intermediate stables. So they're like in the middle ground. And the thing about stables is the strong ones will probably hold their peg at $1. The ones that haven't been tested, though, if you're in them and the market does a colossal dump, they could lose peg and the thing could go to 0. So you have to be careful in which stables you're in. And so you have to decide what your risk level is and how comfortable you are with risk in the market and in stables. If you're not comfortable with risk at all and you just want to earn, then in my opinion, I would stay in these kind of top ones. If you're comfortable with a little bit of risk, and I mean, I can tell you, I have a lot of, I think it's called Day, and I think it's a great stable. I think My holds up fairly well. MIM's held up fairly well. Frax has held up fairly well. So I don't think they're bad, and I don't think they're negative. I just think they're intermediate levels. So I've actually watched this one hold peg quite well. So I'm pretty confident in this one. But if you want to be super risk averse and you're just like, I just want to be in one thing, then I think these top ones are going to be your best bet. The intermediate level ones, I think for me, are like these 4 that I like a lot. And then kind of with that, and then the last thing I look at are risk assets. So risk assets are like Bitcoin, Ethereum, the assets that move up and down and have market volatility associated with them. So in this market, I don't really want to be dumping into risk assets because I don't really want to lose money. I don't want to be in a position where I have to watch charts. And so what I do is I'll typically have a 3-pronged strategy, and I call this my DeFi Pillow Strategy. And so what we do in this strategy is we create a stable backbone. And so we have stable coins that we have in reserve that are the backbone that are going to produce APY or APR for us. So that way, while we are in the bear market or where we are in a market that's unpredictable and highly volatile and wants to go to the downside, we're still earning and stacking stables. So when the market moves and starts going to the upside, the stables we stacked can be deployed and utilized as the market pumps. And as the market starts dumping again, we can remove those risk assets from the market and go back into stables and create this looping strategy. So I call this second part the looping strategy, because you're able to take stables, you're able to deploy stables when the market goes back up. When the market starts going down, you remove that and you deploy back into stables, and you set yourself up in a pretty good position to where you can continuously earn even when the market's down, even when we're in a bear market. And for me, a lot of the time, the earnings and the predictability of the bear market's a lot easier because we're in stables and we have APYs and we understand where we're going. So there's a couple of strategies that I follow. And I'll have a couple examples of this as well. And I did a couple workshops on these. So if anyone's interested, just let me know on that. But strong stables to strong stables. This is basically taking something like UST, so like UST here, and staking UST for more UST and just letting it compound. Basically set it and forget it. You put it in there and you just you either put whatever, I put whatever in there and you keep stacking every month or whatever, but it just keeps feeding into itself. It's just a circle. So like Anchor Protocol is a good example of this. Anchor Protocol, you can basically earn 20% APY by doing nothing. You just put your UST in here and it just keeps going. It just keeps looping. It just automatically reinvests it back in. You don't have to worry about it. And this is like ridiculously high. The average bank account, I think I saw one today from like SoFi that was like 1%. So we're getting 19%. Even with inflation, you're still beating where the market is on a downturn, and you're probably beating the market where it is on an upturn. Maybe not on an extended bull market, but you're beating the general market, maybe not the crypto market. So that's kind of what a strong stable to strong stable base looks like. Sometimes what I'll do as well is a strong stable to like intermediate stables and then loop that back into stronger stables or have a mixture of them. A good strategy for like a strong stable, intermediate stable sort of mixture for me is like Liquid Driver. This is literally one of my favorite protocols in the world, but I'll use like an intermediate stable and a strong stable, and I'll put them together and I can use the combination of assets to produce an APY that's double what I would produce over here. So I create a bigger and better and easier strategy for me to earn. And now this comes into another one too, like we can go on here into like Beefy and we can put in US dollar coin, UST, two stronger stables, mix it with an intermediate stable. And then this one will automatically reinvest back in. So the three coins intermixed together, it's like 33% each. It'll continuously just reinvest. So you just continue stacking that. Now the APY here is 12%. So you kind of have to look at, okay, is that daily 0.0319% amongst these three going to be better than just putting one in here? And if it is, well, then your strategy, my strategy would be, okay, if it's better, then put it in here. If it's not, then there's no reason not to put it in here and just have one simple base that I don't have to worry about. That's kind of what that strategy would look like. And then the final strategy is where you have the strong intermediate stables plus risk assets, and you loop back into those. And what that kind of looks like is Liquid Driver that I was just showing. So that's taking like day or dire, however we call it, and US dollar coin, and earning that 40%, but earning that 40% in a coin called Deuce and a coin called Liquid Driver. And you have to be careful with some of this stuff because sometimes these farm tokens will just go down. This is one of my favorite protocols though, and I believe in what they're doing, and it hasn't been horrible. And this Deuce coin, I think it's called Dias, but this one I got in. I started earning these rewards at like $40, and now the coin's like 450. So then what I'll do is I'll take these and I'll take the reward, this reward, and I'll put it in here. And then I'll take this reward. So then when we put it in here, we earn that. Then I'll take this reward and I'll put it in here and I earn that. So then what I'm doing is I'm essentially taking my base, which is a strong and intermediate stable mix. So it's risk averse. I'm not in a volatile asset, and I create risk assets from it. And then I use those risk assets to loop into more risk assets. And then I take those and I sell 50% back into here and put 50% back in here. So I keep looping and I keep building on it. So then what happens is my average APY ends up being like 150% because I'm able to continuously loop off of that and create this looping cycle and looping strategy. And so this is what I call the DeFi pillow strategy. You essentially create what I call a pillow. So you create a pillow that you can land on, and a pillow that's going to support you, and the pillow that's going to allow you to not crash and burn and fall safely and create wealth in markets that are on a downturn, in markets that are in a bear market, and markets that aren't going well. And so I hope that's helpful. Next time, what I'll talk about is how I figure out which protocols are safe, and this is DeFi, it's the Wild West. You do have to be careful. How I figure out which protocols are safe, what I look for, what I think makes something desirable, and why I choose to get into something or not. So I hope this was helpful. If you enjoyed this broadcast, just give me a yes down below. And if you have any questions, drop those down below, and I will answer them before I jump off. But I hope this was helpful. And if you have questions for my broadcast next week, just drop them down below in the comments and let me know so I can get on and answer them. And look for more stuff. Follow me on Twitter at ChandlerSAF, and you'll see me put market updates. And every Monday, I'm going to make sure that I come on here and do another market update to keep everybody updated and involved in what's going on in the ecosystem. All right, I will talk to you all later. Oh, make sure to like and subscribe.